Alright, guys, Jeff here. Today's Friday. Okay, so we have a lot of earnings to actually go through. Of course, you probably see that the market was really going through a lot of movement. Okay, first off, let's go through with the fangs first. Okay, we have to go through with Amazon. Okay, Amazon was very disappointing. Okay, first of all, we have to go through Amazon, thinking that they will actually get a profit of $6.8 billion, ended up losing $1 billion to around $3 billion in terms of their operating margin down. AWS actually did $18.44 billion as compared to $18.3 billion expected, which is a slight beat, which is good because we did expect AWS to actually be a better services, a better product as compared to all the other product they actually have. So I think that AWS is a great thing. But I'm a little bit upset that they actually only beat it by only that small little margin, which is $0.13 billion. But nevertheless, still a pretty good beat. Nevertheless, okay. Next up, we have to talk about Prime, Amazon Prime, and Prime Videos missed with $8.4 billion as compared to $8.6 billion that was being expected. Operating margin actually missed by 150 basis points, which is about 1.5% or so. And the worst part of Amazon, the worst part, Amazon lost $7.6 billion investing in Rivian. So I always talk about Rivian a lot, and I shorted Rivian a lot of times. Okay, I made a lot of money from shorting Rivian actually. Okay. And it's not just Amazon as well, okay? Because Ford is going to be going through a lockup period for Rivian as well, and they are able to actually sell off from Rivian as well. So that's going to be coming up in May, on the May 9th. That's going to be happening on May 9th, where Ford's lockup on Rivian is going to be unlocked, and then people can basically just sell off the Rivian stock if they really wanted to. But Amazon losing $7.6 billion from Rivian is absolutely mental, because what happened last quarter, where Amazon basically showed us one of the best beats in history with a $21 EPS as compared to a $3 EPS as expected. And what Amazon actually did was, because Rivian was really on this high horse, and Amazon basically just said, you know what, because we invested in Rivian, and that's why our profits were actually up. But the thing is that those were all unrealized, and because of that, it doesn't really count. Which is why even when Amazon beat the estimate last quarter, they only went up by like 3%, and right now they missed on almost everything possible other than AWS. Everything was missed, okay, and they're down 9%. Right now in the pre-market, they're down 9%. Previously, they were actually down 10% in the after hours, and that's horrible. Okay, so now this is beside the point. Next up, we got Apple. Apple is the complete opposite from Amazon. Apple actually showed us a $97.3 billion revenue beat. As for the expected, it was a $93.8 billion, so that was good. iPhone sales beat, iPad sales beat, Mac beat. The only thing that was a miss, and it was a slight miss, was the wearables, which is your Apple Watch, which is your AirPods and such. And the most important part for this all, China sales actually went up 3.5% year over year, which is crazy for me, okay? I have already talked about this a lot, especially for Apple, okay? I even talked about it in the FANG video just 2 days ago. I said it before, Apple is going to be very important, because we have to know about what's going to be happening for the Chinese market. The Chinese market is the most important one, because with what is happening with the lockdowns in China, supply chain pressure might actually build up, and that's my big worry. And of course, it's still a big concern. Nevertheless, I'm not saying that the concern is gone, but seeing a 3.5% increase for Apple is definitely good. Okay, next up we have also the next thing, which should be for the lockdown that is happening in China. People are not actually going out as much, and when people are not going out as much, people are not spending as much, which is why China sales being up is very important for us. Okay, so that's why I said that the China part of things is going to be a very troublesome thing for us. But turned out that it was better than expected. However, in the pre-market right now, Apple is still a little bit down. Okay, but you have to understand the reason is also because Apple is actually expecting next quarter to be a little bit bad. Okay, and this is very important, because Apple have never guided in the past. Apple never guides. Apple, Nvidia, AMD, all these companies, they do not guide. Okay, And for people who are unfamiliar of how this whole thing actually means, what guiding means, it basically means when they're done with the earnings report, they basically guide for the next earning report, basically giving everyone a consensus of like what it should basically be. And all this expectation that was being created for Apple was basically the street consensus. Okay, Apple do not guide, but the thing is that what Apple actually said in the earnings call was saying that next quarter it might be a little bit bad. And that's kind of the reason why people are kind of getting out of Apple a little bit. Okay, Apple is not that good of a store of wealth anymore. And of course, we also have other earnings that I don't really want to go through because I want to go through some of the news as well. Roku, okay, Roku was an unexpected beat because we actually expected Roku to kind of miss as well. But the thing is that because we saw what happened with Netflix first lost in a while, and we saw that, there is a good possibility that Roku is going to miss. Okay, but Roku actually beat on the revenue and top and bottom line. So very, very surprising for Roku. And then next up will be Robinhood. Okay, and for Robinhood, let's be honest here, they kind of been going down and down and down, a little bit upset, honestly speaking, because I do have Robinhood shares. But like I said before, on updates for Robinhood, hedge your positions, which is why I'm very, very happy that my covered calls on Robinhood is actually going to be making money later on. Okay, I'm probably going to be making an additional $400-500 or so. Of course, that's not a lot, but those are basically my hedge position for me to basically get those covered calls out of the way. But Robinhood was pretty bad because user growth went down, people buying crypto were down, everything were down. Okay, the hype for stocks, the hype for investment is all gone. And that's why the thing is that for Robinhood, they did get a huge hit from that. And people are also getting into the more secured investing platforms, be it your Charles Schwab, your JP Morgan for the American audience, and for all the others, they basically are actually getting into your public.com platforms that do not actually have payment for order flow. So yeah, that's kind of how it is for the earnings. All right, so anyway, let's cover some news today. All right, let's go through. The biggest thing that we actually had yesterday, which basically created this sort of fear in the market, okay, which is the US economy strength in the first quarter. Okay, and honestly speaking, for the GDP to actually go down, okay, contracted at 1.4% annual rate. This is huge, okay, because the thing is that when we are talking about recession, okay, we are talking about getting into a recession, the first thing that we have to worry about is GDP going down. Okay, the moment GDP goes down, that is your first sign that a recession is near. Okay, if by the next quarter we actually see the US economy shrinking yet again, and if we see it for the following quarter yet again, it means that we are in a recession. And of course, how recession basically works is kind of like a lagging indicator, because we're not going to know about when they are going to go through the whole shrinking. Okay, we only know about it when it was actually being reported. And because of that, you can look at the SPY, you can look at the NASDAQ, you can look at the Dow. Okay, yesterday, basically, we had a very, very red market. And I'm very, very happy about it. I'm not going to lie, because I did hedge a lot of my position before that. Okay, but of course, I wasn't expecting that the GDP was going to be a miss. I basically hedged my position simply because there was an up market, and I basically just hedged my position. Every single time there's a down market, I got to get rid of my position, and I re-hedged my position on every up market again. That's kind of how I yield farm a lot of the time. So yeah, GDP shrinking definitely going to be a concern for a lot of people. All right, so I'm going to just look at this again. Amazon post first quarterly loss since 2015 as cost. Rivian stake weigh on results. This is crazy. Like I said before, I wasn't expecting them to really be. I really wasn't expecting this, but come on, let's be honest. If you actually watch my videos and you consume my content, you know that I hate Rivian, right? Okay. So over here you can see results were also hit by the stake in electric vehicle maker Rivian Automotive, which has seen its stock plunge by more than 65% this year. Amazon has a roughly 18% stake in the company and has a pre-tax loss of $7.6 billion due to its holding. Amazon was expecting $6.8 billion of profit, and they lost pre-tax $7.6 billion in just investing in Rivian alone. Okay, they basically lost one entire quarter worth of profit by investing into Rivian. That's how crazy it is. Okay, FYI. Okay, FYI. So yeah, this is quite crazy. All right. So next up, we have to look at Apple. Okay, Apple saying that COVID-19 lockdowns in China looms over sales. Okay, which was my concern before. However, of course, with the China sales actually up by 3.5% year over year, pretty good. But of course, Tim Cook says that the supply chain challenges are going to be coming up for the next quarter as well, which is also my concern for Apple. Because you know how Apple is. And the thing is that, like I said before, Apple do not guide. Apple do not guide. And when Apple do not guide, and for Tim Cook to basically just say, okay, you know what, there might be some supply chain issues that we might be facing in the very, very near future. And because of that, that's going to be a concern for Apple. And I can see why. And that's one of the reasons why in the pre-market, Apple is actually down 2%. Okay. And for Apple, Apple was actually up yesterday. Apple was actually up about 6% or so, I feel. And then afterwards, they kind of just dwindled down to the 4% mark or so. I do think that, yes, they are bringing up concerns because over here they also say it. Okay, Tim Cook's on his view on the future amid high inflation, pandemic lockdown in China, and the war in Ukraine. I do think that these are, of course, very, very fair concerns and challenges for Apple. Okay, especially with high inflation, that's going to be creating more supply chain issues. With pandemic lockdowns in China, that's going to be affecting semiconductors. They're going to be affecting the assembly line in China as well, and they're also going to be affecting the sales in China as well. Next up, we also have the war in Ukraine. Same thing. It's just that this one is just basically being replicated in Ukraine and Russia. Okay, because or whichever country that's going through the same exact thing as well. So that's why this is huge for Apple. A little bit sad that this is happening. But yeah. All right. Next up. Also very, very important news. Okay, Elon Musk sells about $4 billion in Tesla stock after agreeing to buy Twitter. So yesterday, Elon Musk basically tweeted saying that he's done buying. Okay, he has sold a total of $4 billion worth of Tesla stock, and this means that Tesla will most likely stop selling off already. And that's one of the reasons why in the pre-market alone, Tesla actually went up by 3%. Even right now, it's up by 3%. Okay, and this is huge for Tesla. Okay, because the thing is that the moment Elon Musk said that he has already finished selling and he will not be selling, or at least he pledges there won't be any sales coming up, this actually kind of bring forth the mentality that Tesla don't really have any more shortcomings in the very near future. Okay, everything else is going to be priced in properly, and now the price is going to slowly price in the fact that Elon Musk has already sold $4 billion worth of Tesla stocks. So personally, I do believe that in the next 2 weeks or so, we will most likely see Tesla go back to the $950 price range again. I do believe so, and of course, unless if we are talking about the FOMC and the CPI being the issue why Tesla kind of falls. But if those are not going to be huge issues for the economy, I do think that Tesla is going to go back to $950 or even $1,000. Never know. So yeah. Quite interesting for us to actually go through to really see what Elon Musk can actually do for this whole situation by just selling Tesla. And the thing is that, because let's be honest, we all saw what happened with Tesla 2 days ago when Tesla actually went down by 12%. And I do think that if you're down by 12%, chances are that there must be a whale who was selling somewhere in this 12%. And I guess that was Elon Musk after all. All right, so next up, over here, Apple expects supply shortages to slash sales by up to $8 billion. This was what basically what was being said in the what basically said in the earnings call themselves. Okay, Apple predicted that the supply constraint would cost $4 billion to $8 billion in revenue during the current quarter, a warning that sent the shares tumbling and cast a pile on the record-setting results that the company just reported. Do understand, Apple reported $97.3 billion when they were just expecting $93.8 billion. This is almost a $4 billion of beat. Okay, and of course they're just basically saying that supply constraint is definitely going to be affecting them $4 to $8 billion in revenue, and this would most likely be brought forward in the next quarter, which is why kind of working like a little bit of a guidance. Okay, but the thing is that of course we will still have to look at the Wall Street consensus to see what will actually happen from there on up. All right, so final news before I actually have to go back to work. I do have an appointment with a client. Okay, so over here Manchin basically rejected Biden's EV tax credit as ludicrous. For people who do not know who Joe Manchin is, basically he's a Democratic senator. However, he is very, very leaning to the Republican, the GOP side of things. Okay, so he is also one of the most important senator in the Democratic Party because he do hold a deciding vote, basically alongside with Krista Sinema. Man, all these names. Okay, Joe mentioned pushback on a Biden administration proposal to expand the popular tax credit for EV purchases, calling the idea ludicrous and adding a new obstacle to White House plans for fighting climate change. So like I said before, okay, what Biden is actually doing, especially for his fight for more oil in the US, is basically taking one step forward, two step back. One step forward for the tax credit on the EVs, and then two step back by fighting for oil. Okay, a lot of people are basically very, very upset with Biden because of that, because it's kind of just going against your whole climate change, your whole agenda against for climate change, and because of that, basically, Joe Manchin is just saying that this kind of doesn't work out, and you're not going to be fighting climate change if you are continuously going to be doing this kind of thing. Okay, so there's a waiting list for EV right now, and with the fuel price, but they still want to throw a $5,000, $7,000, or $12,000 credit for us to buy electric vehicles. When we can't produce enough product for the people that want it, and we are still going to pay them to take it, it's absolutely ludicrous in my mind. Okay, so over here, you have to kind of just break up whatever he's saying. Okay, when we can't even produce enough product for the people that want it, okay, and we're still going to pay them to take it. Okay, so he's actually talking about how, right now with the whole supply chain concern with all the EVs, okay, it's not just going to be Tesla, it's going to be your NIO, it's going to be your XPeng, it's going to be your Ford, it's going to be your GM, it's going to be your Rivian, okay, it's going to be your Lucid, whoever it is, all these EV companies, they're all going through supply chain issues because of batteries, okay, battery shortages. We all heard all about it as well, okay, and the thing is that because we are not able to produce this much EV, but the thing is that we're actually going to pay people to take them, even though we cannot produce fast enough. So, and that's basically like, one step forward, two steps back. And it's absolutely ludicrous in my mind, which fair enough. Okay, but I do think that if Joe Manchin is basically saying that, you shouldn't go through with a tax credit, then that's going to be even worse for the EV sector, because if that happens, then basically no one's going to be getting an EV. Okay, well, I would say no one's going to get an EV, but the thing is that without the tax credit, I do think that that's going to be discouraging some people to really get into EVs as well. Instead, Joe Manchin said more money should be spent developing hydrogen to decarbonize the transportation sector, this is his redeeming factor, where I like about Joe Manchin a lot. Okay, I do think that the hydrogen industry is really, really high for the potential. So I do think that yes, more money should actually be spent to invest in developing the hydrogen to decarbonize the transportation sector. It's not supposed to just be for vehicles, i.e. your cars and trucks. I do think that you should do for buses, trains and such. Those are going to be more potential for you to actually decarbonize the whole entire transportation sector. There's a lot of things that was actually being said by Joe Manchin that I don't think I would have enough time. But anyway, that's all I have for today's news. Let's talk about weekly trades, because I do know that you guys really enjoy those weekly trades. Honestly speaking, I'm pretty sure that you guys are not going to be surprised. It's simply just me selling calls and then buying back those calls and then selling more calls. Okay, same thing. Snapchat, SoFi, Robinhood, Palantir, Occidental. Funny thing about Occidental Petroleum, I actually sold all of my puts on Occidental Petroleum, and then afterwards I actually bought back in for Occidental Petroleum when they suddenly struck up the price again. So that was a really good trade for me somehow. I wasn't really expecting to really get back into Occidental Petroleum, but I think that the price actually went down to about $52, and that kind of allowed me to get out of my puts. And I made about a 34% profit on those Occidental puts. Afterwards, I bought back more Occidental puts at about 50% of the discount. So I'm very, very happy about my Occidental puts. Up next is also, I got out of my Microsoft calls. Of course, those are going to be out at a loss, because I was expecting Microsoft to be doing really, really well. Of course, from December all the way to April, right now, you could definitely see that the market was actually going down. It doesn't matter what stocks were you in, be it in your blue chips, be it in your value stocks, tech stocks, growth stocks, whatever it is, most likely are going to be down at least about 30 to 40%. And because of that, yeah, Microsoft was a really bad call for me to really get. However, the case is I did lose about 70% on those calls, which amount to about $6,000 or so. But yeah, I did get out of them after the good earnings on Microsoft. That's how I kind of minimized the losses and such. However, then afterwards, Microsoft didn't really do much afterwards. But yeah, basically those are my plays for the week. And chances are next week there might not be any weekly trades, because the thing is that I don't see myself really moving that much, especially because we do have the FOMC coming up next week as well, and also the CPI coming out the week after. So I do think that I might want to just be, I might want to just hold on to my position, but we'll never know. I'll check back with you guys on Friday in terms of my weekly trades by day. Thank you guys so much for watching. I'll see you guys